Hello, hello, good evening, everyone. God bless you. Hope you guys had a wonderful day today. Are you ready to get started? That's my question. Got a new scenario on the board. This one's going to be interesting. Okay, today's scenario is going to be really interesting. I'm going to try something different with velocity banking. Okay, got a new little system that I'd like to try out. It's called micro chunking. Okay, I'm going to do some micro chunking here. So let's see how we do. Let's see how we do. Hello, everyone. Tamara, Joel. How you doing, Joel? I got your email, Joel. I will definitely be reaching out to that pastor. Probably even just visit the church. Check them out. See what I can do. How you doing, Taylor? How's everything been going? All right. Taylor, let me know your status. How are things? Are we on the right track? Everything's going well? Evil says I cut in on Kanajay. I don't know. What do you mean? Uh, Ro V, how are you? Bang, how you doing? Jeremy, how you doing? Jeremy, good to see you again. Good to see you again. Coming back for some more. All right, class. I'm gonna wait a couple more minutes. I did say we're gonna start at 10:15, but I had to buy me some time because man, I my little sister made some cookies, and I went over there for a drink of water. Came back with like 4 cookies. I was like, oh my god, just tearing them things up. How you doing, Javier? Hello, Craig. Oh, okay. So Connor J's doing a live stream and I'm doing a live stream. Whoa, ho, ho. Whoa, ho, ho. By the way, Connor J Wallace is another velocity banking teacher, has some good content out there, So if you're looking for some, you want to see the differences, see how, everyone does their thing. How you doing, Oregon? Oregon, I have not forgotten about you, sir. I have to keep doing my homework and I'll be putting up some more content for you specifically, and we'll get some work done together in the future. Henry, how are you, Henry? Hawaiian, how you doing? Aloha. All right, is everybody ready? Because this can be good. All right, this couple right here had me stressing. Oh my god, had me stressing out. So I was like, Lord, let me keep my cool. Let me keep my cool, Lord, because I want to recommend the best advice, and guide my families in the right direction. But sometimes you gotta let them just do what they want. Um, but that's okay. I was tempted to just call the wife and be like, hey, let's have a one-on-one, just me and you. All right, let them go work, right, and you just log into the banking account and you let's do it together. Okay. I was tempted, but I was like, nah. Let me just make my case and see what happens. Okay. So we have a husband and wife doing velocity banking together. That is how they actually got started with me. First, it was the wife, and then she had to do some convincing, got husband on board. I was like, yes, yes, let's get started. So, together, we're making 8K a month. We're starting out with $6,923 of expenses, and debt is 65,000. Cash flow, 1,200 bucks. Now, what was pretty interesting, what I did not display on the board, okay, is that in the month of January, since we got started, since like in December, they got their line of credit in a short period of time for 15,000, right here, 11.75%, and then they made their first chunk of $9,500, right, which wiped out 5 debts, all at once. So cool. By the way, this so far, they have, before they met me, they're starting out with 22 separate debts. 22 separate debts. You know how stressful that is? So when I'm looking at cases, sometimes, not all the time, but sometimes I'll make a chunk where it'll wipe out like multiple debts just to relieve stress. Mind you, this one chunk, instead of chunking at like one specific debt, I decided to like spread it out because I was like, you know what? Psychologically, they're going to feel a lot better having 5 less bills to worry about. Okay. So now they made this chunk. Now they're in the velocity banking method here. Okay. Now, what was interesting is they threw a wrench at me. They were like, hey, we're gonna get an extra, 10,000 or so. Okay, what should we do with it? Now you know my answer. Okay. Whenever someone poses the question, hey Denzel, I got an emergency fund of 10K, I got this extra money coming in, my answer is always the same. Dump all income into the line of credit, take expenses out, keep cash flow in. Every single time. That's gonna be my same answer. Because that money sitting there doing nothing, whether you want to invest in something or not, right? Whether you're like, I'd like to buy this property or I'd like to invest in this business. I'm like, cool. Why not pull from here and then take that extra cash and then do a wash? Do a wash, right? Where you wash the money out, right? And your money's not at risk, okay? You're investing in something and then you still have your money zeroed out in the line of credit. So that was the wrench that they threw in front of me. And we were going back and forth. And, they decided, all right, I'm not going to put the money in the line of credit. I was like, all right. So listen, what we're going to do is simply from January till May, this couple is going to do velocity banking where they're just putting the income in, taking expenses out, keeping cash flow in, doing their thing. All right. Come May is going to be the second chunk. Come May, we're going to make a chunk for 10,000. Okay. And we're going to wipe out another 5 debts: a Walmart card, a Just Target card, a City card, something called Mercy. Okay. Wow. 5 more debts. So 5 and 5. Whoa. Okay. Now, as soon as that happens in May, okay, so now we're in May. All right, so stay with me. January, we made our first chunk. Now we're just doing velocity banking. Velocity banking is the in-between months when you make your first chunk to the next chunk. Velocity banking is happening in between, where we're trying to, bring the line of credit back to zero. All right. So we make our 10K chunk, and we're gonna get a cash flow increase of 431 after we wipe out these 5 debts. All right. And then here's how it looks. Income, right, goes in for the month of May. Expenses, see how they dropped? Expenses drop down. Okay. Cash flow stays in. Balance from 10 to 8K. End of May. That's how that looks. And then we're in June, right? 81. Income goes in. Expenses come out, right? End of June. Boom. Now here is where it gets interesting. Every time the line of credit balance on a fresh month, okay, listen to this. Whenever the line of credit, okay, the balance on your line of credit, whenever it's less than the income that we're going to make for that month, is an indication that you may have the ability to make the next chunk based on the amount of credit limit there is available. Stop right there. Any questions on that? Okay. Let's see. Let me scroll up a little bit. Evil says had to switch over. Yeah, man. Come on now. What is he giving good information, or is he just, is it a sales pitch or what? Rich says, what's up? Craig, let's do this. Cool. What up, teacher? Hello, hello. Yep. Okay, evening. All right, let me see. Am I seeing any questions? What is the best bank to get a HELOC in Florida? Gee, I don't know. Let's do some homework. Florida's a big state, okay? And that's a very common question, right? Denzel, what's the best HELOC? What's the best line of credit? It's not about what's the best one. It's which one works best for you personally. Can you handle $100,000 HELOC? Or do you feel more comfortable with a simple personal line of credit for $20,000? Make a decision, right? Once you figure out what am I most comfortable with, then we do our homework where we look at the local credit unions in our area and you call them, right? You call them up, build some rapport. Remember, you want a bank that you can call, chat with. You can have an appointment where you sit down with the banker, you make them laugh, you tell some jokes, right? You want to make sure it fits all of Denzel's criteria in terms of acquiring the line of credit and the best line of credit for yourself. And for you more, I've done 2 videos on how to get a line of credit and then the best line of credit for you. So I highly suggest you take a look at those, okay? Ruben, that is probably the hardest mindset to change, to use that 10K at the line of credit. I understand what Denzel's saying, but the time it took to attain that amount, yeah, man. Yeah, that's the tough part. It's like you work real hard, right? And someone is telling you to put all your money in a line of credit. So it feels weird to not have like 10,000 sitting in your savings account. For some reason, for some odd reason, we have become so conditioned that we feel safe when our money is in a savings account, at the bank, and we got to get out of that. All right. Got to get into this velocity effect. Okay. Hello from Atlanta. Hello, hello. Let's see. Great info. Exactly what I've been trying to learn. Lots of open line, but too afraid to move forward. Why are you afraid to move forward? Come on now. Are you just not for having emergency fund? Though I understand letting money sit is useless, but how can I break my mind of those? This is how I was raised. LOL. I know, man. I know. My emergency fund, okay? That my emergency fund is that, okay? And then my other emergency fund is my life insurance policy, my life savings plan. Everything else is cash flow, right? Everything else is just the mechanics, okay? Any velocitizers here with me in Vegas? I think I have a gentleman that I'm working with in Vegas. Is that you? Because, I don't know, the names get mixed up. Let's see. So here we are. We're going to talk about a new strategy. I'm going to practice this myself. Okay. I call it micro chunking. Instead of waiting every 6 to 9 months to make your next, $10,000 chunk, or your next $15,000 chunk, or $20,000 chunk. I think this only applies to people with a lot of debts all over the place, right? Like a lot of Little debts, you owe 1,000 there, 3,000, 4,000, 2,000, 6,000, 8,000, 7,000, right? You owe a bunch of debts to everyone. Okay. What I did on the board here is I'm gonna micro chunk. Notice how the first chunk was 95, second chunk was 10, and then only 2 months later, May, June, right? In July, I'm making another chunk, but I'm calling it a micro chunk. It's going to be a small chunk of 3,225. We're going to chunk at their debt on PayPal. They owe PayPal this amount. It was higher in January, but it's going to drop. And then here is the cash flow increase that we'll get, 113. So if that was the balance in June, and then my expenses go up, my chunk brings the balance up to right here, and then my income goes right in, and then notice how expenses drop, right? Less money coming out of the line of credit. Notice how I didn't wait for the line of credit to go to zero. Playing with this, I want to see how it works. I like it because I like the numbers. Okay, I rely on numbers. So here we go. That's where the balance was. The income goes in for the month of July, and the expenses right here for the month of July. And look where the balance goes. 8,167.28. That's about what the balance should be. Okay. Another benefit that I didn't put on the board here is that they do make extra money on top of this. So that's gonna I'm gonna be like this. Yes, yes, go, fast. Okay. And then look, I wait another month or two. All right, balance. Okay, income in, expenses out again. Let's come up here. Balance in August is at 6406.04. Notice how, remember back over here in June, the balance was at 6703, less than the income, right? It happened again in August. The balance is less than the income. That's an indication, maybe I can chunk again, right? So that's what I'm going to do. I'm going to chunk again. We got another debt, capital one. That's the monthly payment, 139. That's the total chunk, 4,100. Look where the balance goes, 10,506.04. Not bad, right? Not bad, right? We're not breaching the line of credit. We always have, a good amount of space in it. Okay, look, August, right? Now we're in September. Okay, September's income goes in. Expenses, look at that, 6240.76 from 6379.76. Not bad, right? So expenses drop because we're not paying that no more. Okay. Balance come September. Okay, is at 8605.80. Okay, so that's more than my income. So I'm like, you know what? Let me go another month of velocity banking. Dump income in. All right, take the expenses out, keep cash flow in. Boom. We're in October. We're at 6705 again. See that? 6705. We're at 64. We're at 6703. This is like a sweet spot. It's like a really good example here. It's like a real good sweet spot of when the balance hits a certain point where we can go ahead and pull more funds out of the line of credit to create more cash flow. Micro chunking. Watch how fast we go. Ready? We do it again. Another 4K chunk at another Capital One credit card. We wipe out 169 of expenses. Okay? Be taking notes. All right? Have your notes out. This is really cool. Micro chunking. Ready? Balance comes up to 10.9. 10.9, it was 10.5, 10.95, right? We're maintaining a range, okay? Look, now we're in November, okay? Income goes in. Look at that. Expenses drop to $6,071.76. End of November, the balance is at $88.76.32. Do velocity banking, don't chunk, right? Whenever I say when we're doing velocity banking, that means we're not chunking at anything. That means we're doing velocity banking on the personal line of credit or the HELOC or whatever our debt tool is, okay? December, balance is at 68.0708, right? Which is gonna prepare us for the next chunk that we're going to tackle. So it looks like every 2 months, this couple right here is chunking, bang, 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 bang. And each and every time cash flow is going up. So when cash flow goes up, guess what? You're able to zero out the line of credit much faster. We're still paying all our bills, right? So when I did the math, ready? If you were to add this number, that chunk right there, that chunk right there, 41, the PayPal chunk, the $10,000 chunk, the $9,500 chunk, okay? And then all the other debt payments that this family has, they got the mortgage payment, they got, a bunch of other, remember, 22 debts, 22 or 23, I think it was. So in a 12-month period, we go from 22 debts down to 13, okay? And when I did the math, $70,000, right? Right, and this is interest included. $70,000 of debt wiped out off that number right there in a 12-month time frame. So if you were to take that number, right, and that number, divide them, this couple right here will be debt-free in 5.18 years or less, okay? They can go faster if they use any and all extra cash flow, whatever, to flow it, okay? Even if they wanted to make an investment in something, right? Because I know that question comes up a lot, right? I did a video on that prior. Do I invest or pay off debt, right? If you're asking me that question, I would like you to provide me with material to look at. You're like, hey, here's a property. Here's the comps in the area. Here's the right? Here are all my steps, and here's what the return on investment could be. All right, if you can provide me with all that, then I'm like, cool. But if you're like hope and prayer, oh, let me throw money here at Joe and see if they make me some money, then I'm not gonna be like on board with you. Really not. So, what are your thoughts, class, on micro chunking? Okay. Micro chunking. What do you think about it? Let's see. I really haven't done it for a lot of couples. I gotta be honest, haven't done it myself. I'm actually practicing it right now where I just did a micro chunk at a credit card. And then next month I'm going to be able to make another chunk. And then I don't know, I just feel like I'm going faster, right? And then when I was doing the numbers, when I did the other way, when I just waited like every 6 months, because from January to May or June, that's about a 6-month time frame for the next chunk. So then the next chunk would be in December, right? And I mean, you could just add the 3, the 4, and the 4, so 4, 8, that's like 10, 11,000 right there. But see, the issue in a case like this, when there's So many different debts, so many different interest rates. The longer we wait to pay off these things, the more interest is getting tacked on these payments where they're not really doing much damage. So if we catch them early, one at a time, bam, 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 I'm able to make another chunk. I'm able to get in another chunk. You notice that? Right around December. Let me see. Let me read some questions here. Let me see what we got. Okay. Is putting extra money in the line of credit possible? Yeah. Not above the limit. No. They'll send you your money back. So or they might increase the line of credit. They might. Let's see. Hawaiian says, always worried about the rainy day. Got to get that out of my mind. When there's a rainy day, unexpected expense, emergency, you pull from here and then you pay yourself back with the cash that you would have paid for that rainy day. That makes sense? This way we don't mess up the timeline. Money is always flowing through there. The faster I go, the better. If you have a balance in the line of credit, you can pay into down to zero balance. Yeah, okay. When obtaining a personal line of credit, can the bank deny you of the credit or at any time? I know they can change in the APR based on the prime rate. Israel, when obtaining a personal line of credit, can the bank deny you of the credit? Are you talking about before you even get approved? Because that's an obvious answer, yes. Or do you mean I have a personal line of credit and then for some reason they take it from me? The only reason why they would take it from me is if I max out the personal line of credit. If I spend more than what's available, then they might be like, yo, what's this kid doing? You know, what's going on? Ruben says, depends on the term of the line of credit. Yeah, in terms of the APR, yeah, interest rates are always changing, right? So they'll change it up. Let's see. Wow, I actually micro chunked without knowing that's what it is between my chunks. Nice. Miss Tama. Nice. I like it. Yeah, it just hit me, you know, because I was stressing out because I'm like, oh, I gotta redo the numbers again because they wanna use the extra money. And now they don't want to use the extra money. And I gotta do the numbers all over again. I'm like, oh my God, what do they want to do? Right? And then all that, I was like, what if they can do their little investing and then they can micro chunk throughout the year and get fantastic results. Fantastic. Good evening, Damien. Is there a substantial difference in having a personal line of credit 15,000 at 16.25% or having a HELOC as a debt weapon? Yeah, there is. Most HELOCs are probably like 6-7%. So there's going to be you're basically paying half in interest. So yeah, that's a difference. But on the contrary, if you ain't got a home, right, and your personal line of credit's your only option, then we got to ride with the wind, man. We got to go with it. Just take the 16.25%, divide that by 30 days. That's what you're actually paying. Okay. Evil says, unfortunately, one of has to get back to building Camrys. I'll catch this on the replay. Oh, okay. You got to go back to work. All right, man. Mr. Ortega, how are you, my friend? We have been micro chunking away at our mortgage every month. And at the end of the 12 months, we would have exceeded the aggressive velocity mortgage plan you outlined for us. Oh, really? Nice. And that's without extra income or any extra money, that's not bad, man. That's the goal. Whenever I'm mapping out a plan for people, understand that I'm always doing things conservatively so I can cover my you know what, right? Because I don't want to be like telling people to go really aggressive and then they don't do it and then they're not satisfied with the results. What's really cool is when I dial back, I show them really good results conservatively, and then they decide to go aggressive, like the Ortega family, and then they get massive results, and then they're like, I love Denzel. That's what we want. Okay, so he says this has been working for us. Nice, 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 nice. Okay, I was lucky that my first local bank I walked into met all of Denzel's requirements. Good, good. You visited 5 banks. See, that's dedication, man. You go to 5 different banks to find the right line of credit. When people out here trying to find the best one, you're never gonna find the best one until you go out and look, until you do the homework, you do the research, watch my videos, right? I got a video where the whole community put every single credit union that they got an approval from. Not bad. Little homework, right? Let's see. Micro chunking. Yeah, Jasper. He's like, yeah, I didn't go over that in person. I just thought about it. I'm like, this thing could work, man. Micro chunking. I mean, it's smaller chunks, right? So it's not as like 15,000, 10,000, you know, more like 5K, 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 like every 2-3 months, bomb, 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 right? But we got to do the math just right, okay? That's the other thing. We got to do the math just right. There has to be a sweet spot. So if you notice, here are the sweet spots, Mr. Jasper. Ready? Here was a sweet spot, and here was a sweet spot, and here was a sweet spot. Okay? And it has to be in sync with this. Okay? Your income. Your income is everything. Right? How much money do you make? What are your expenses? And then what is the cash flow? Right? And then when we're micro chunking, okay, especially when we have multiple debts, right? You got credit cards, you got the student loans, you got the cars, you got the kids' debts and your wife's debts and husband's debts, right? And all over the place. What I was looking for the whole time was how quickly can I get to the cash flow, right? How quickly can I get to it? Because the quicker I can get to the cash flow, the faster I can pay off debt. The faster I pay off debt, the faster this family starts praising in the name of Jesus. Right? You can start singing hallelujahs. And like, oh my, like right around like halfway into the year, when they've wiped out like 35, 40,000 of debt, man, oh man. I mean, my answer will be yes, Lord, yes. When your spirit speaks to me, right? Oh, you just start, then you start tithing, you start blessing people, you start giving, and then somehow a blessing comes back your way, wipe out some more debt, and you're on your way. How you doing, JP? Master Barber. Let's see. Same 10K saved, stuck with monthly payments, 100K debt. Please help. I'm here, sir. You know where to find me. You go to my website, give, you'll do some work, playing games. Let's see. Micro Rich says micro chunk seems okay. I just don't like always being so close to my personal line of credit limit, especially since I used most of my savings. Okay, good point. Good point. Mind you, in this example, I did not use any of this couple's um, savings and the extra money. I did not. I kept it with this. I stuck to that. Okay. So just throwing that out there. Okay, Jasper says, do you micro chunk on a debt that you can pay off or just lower the balance? That's the key right there too, Jasper. Yeah. I am chunking at a debt that I can completely pay off so I can immediately get cash flow. Right? Hope that helps. Let's see. It's a bit scary, but I feel it will save you so much money. It certainly will. It is Hawaiian says it is flowing. It's more a mental thing. This works like a champ. It sure does. I mean, velocity banking is so flexible, right? It's like dancing, right? It's just you gotta be flexible in the hips when you're dancing with that lady, right? You just gotta be like, you know, you gotta have excitement when you're doing this. And you can't be like nervous, like, oh my God, I gotta call Denzel again because I don't know. You know, I really want to equip you guys to be so like confident. You know, we work in those first beginning months together, and then I release you, right? Go, go help 10 people, right? And then you bring me those 10 people, and then I release them again. I'm like, go help another 10 people. Go, right? Let's see. Bang says, got a personal line of credit back in October for 5K. Is it too soon to ask for an increase in February, October, December? Yeah, man. Too close. Just call them. Call them. Ask them, what is the criteria for getting an increase on my line of credit? What is they usually put a date on your line of credit. They'll be like, oh, you can apply in a year, right? They did that to my mom. They're like, since you're a new member at our credit union, you have to wait 2 years before getting an increase on the line of credit. I was like, wow, that's going to take forever. So let's go to PNC and let's go get a line of credit and see what happens. T Brown says, you basically drop a chunk of money on one credit card at a time. Yeah. Well, in this situation, yeah, there were credit cards, right? So yes, chunking works. Velocity is awesome. It certainly is, my friend. Okay. Did you get the micro chunk idea from watching my video? Oregon, I don't know. No, I was stressing out, rewriting numbers over and over again for this couple. And I'm like, right? So no, it's good for this scenario because of the high interest personal line of credit. You are correct. Larger chunk is good if line of credit interest is lower than the debt being attacked. Okay, I could agree with you on that. Let's see, Israel. Sorry, I mean, you have it already and they basically cut off the line of credit due to unstable economy issues or the bank's own insolvency issues. Well, yeah, bank goes out of business. Usually the bank gets bought out and then your account gets sold to the other bank. So now it translates into that new bank. So the account could still be active, but it just might change names, or if the bank goes down, like down, and the whole economy starts to go down, well, guess what? You know what? Things change, and that's why you got to have your damn money right, people. because in times of crisis, right? I got a new book coming in from Dr. Miles Monroe talking about in times of crisis. Like, what do you do? What do you do when velocity banking doesn't work for you, right? Like, how are you going to act? How are you going to react, right? What's your reaction? So important that, see, you're thinking over there years from now when we got to be focused on right now. How do I get my money right now? How do I 10x my income right now so I don't have to worry about the economy dropping? Because when your household economy, okay, that's the only economy you should be concerned about is your household economy. Because the world could be falling apart. But when you're under when you're under kingdom authority, okay, when you're under grace, okay, and praise and worship and thanks and prayer and everything, right? I mean, who can stop you? Who can stop you, right? I hope that was, kicking the butt right there. Let's see. You feel more comfortable with smaller amount? Cool. Cool. Um, let's see. Are you going to the 10X conference in 3 days? No, I'm not. I'm going on a vacation with old lady because it's the old lady's birthday and I gotta do something for her, you know? Let's see. Okay, I see you micro chunk out of debt you can completely pay off and immediately increase your cash flow. Ah, that makes sense. Sure does. Okay. Do you recommend turning off automatic payments or set up auto payments at a specific time of the month? For myself, for my small bills, for my small like subscription bills, I just keep the auto pay going. For bigger bills, sometimes I don't. It's like a preference. Um, just know that whether you're doing automatic payments or not automatic payments, you still have to manually take money out of the line of credit, okay, into your checking account, and then checking account pays the bills. What I will say is when you're making a chunk to wipe out a debt completely, like a car, student loan, mortgage, just make sure that you do cut off the auto pay, especially, say for example, you have a car payment that's due on the 15th, okay? And let's say we're in our chunk month. Let's say your chunk towards that car is not going to pay off the car, okay? Let's say you owe $15,000 on the car. We're in January and you make a $5,000 chunk towards the car. So it brings the balance down to 10K. Let's say you made that chunk before the due date on the car, okay? Make sure that you cut off auto pay for that month. Because if you don't, you would have made the chunk on the 5,000 and then you would have seen another couple $100 come out of your account to go right to the car dealer, and you didn't want that because we strategically designed the chunk to not only go towards principal but to also satisfy the monthly payment. So in some cases it's like better to just not have auto pay, but if you're not going to do auto pay, make sure you got a board, okay? Make sure you got sticky notes, a calendar, put it in the calendar, all the due dates, okay? Everything. Make sure it's all in there, right? So that you don't confuse yourself. The less you confuse yourself with this concept, the better. The as simple as we can make it simple. Make it real simple for yourself. Personally, Don't compare yourself to other people. Just personally, what can I handle? What gets me, like that, until you can get adjusted to it after, doing it for a certain period of time. Okay, Oregon says, great minds think alike. I got to the micro chunks the same way you did. The math just works well in certain scenarios. Yes. Again, case by case, people. Case by case. Micro chunking may not work for you. Your debts might be too big, right? If I'm working with a family that has a $40,000 debt on a Mercedes Benz, and then you got $60,000 in student loans, it don't make no sense to do no micro chunk. That's Dave Ramsey method, where you take all your extra cash flow and you dump it towards a debt, right? So all we be doing is maybe putting a little bit more. Doesn't make sense. On bigger debts, we want to, you want to do a nice chunk where you wipe out like 2 years of interest, and you shave like 24 months off a 10-year loan, off a 20-year loan. You shave 2 years. Wow. One chunk, 15,000, 20,000, right? So Oregon is right. Case by case scenario. Okay, T Brown says, what if you can't get a line of credit? Then what do you do? What do you do? Do you have credit cards? Can we establish credit? Can we start building your credit? That's what we do. Okay. So when you get denied for a personal line of credit, my lovely couple, the Cardenas family, I think, and the Martinez family. No, I got an email from them today. They said they got denied on their HELOCs. I'm like, damn it. Right? It can be a kicker when you get denied, right? But don't let it take you down, right? You just got to start with your credit cards. Start wiping out your credit cards. The faster you wipe out your revolving debts, credit score will go up higher. Okay? Let's see. Vincent, good evening. Good evening. Are you like late? Because now you got to watch the board if you're late. Let's see. I know you're on vacation beginning February 1st, but I'm still going to sign up on Friday. My man. My man. I think we spoke earlier. I like that. I like that. Let's see. Can you please tell about how banks make money using fractional reserve banking? I'll make a whole video on that. I have a three-part series on how banks make money, how banks save money, how banks invest money. You should totally watch it. Okay, it's in my playlist, and it's called How Do Banks Make Their Money. Right, you should check it out. I cover the fractional reserve banking. Very, very interesting topic there. The whole idea, basically, people, is when you feel so safe putting all your money in those savings accounts, earning you no interest, those banks are taking your money that is sitting safely in the savings account, and they're lending it out to your mama, to your sister, to your brother, to your niece, to your nephew, to your cousin's cousin, right? And all the people at the church, and everyone that you work with, okay? And everyone you went to school with, right? They're taking your money and they're giving it out 9 times over. And they create all this debt, and now they're collecting 9% from Sue, 10% from Joe, 15% from Mary, 12% from Robert, 7% from Denzel, 8% from Vincent, right? That's how banks flip money. That, my friend, is called velocity banking for the banks. Okay? You want to do the same thing by wiping out all your bad debt so that we can then use their money. Oh, so that we can use their money to invest in real estate, right? And do what Grant Cardone does, and Tony Robbins, and Carl Icahn, and all the big shots, right? That are on the internet, Gary Vaynerchuk, all them dudes. You think they're using their money? You think they're using their money to do anything? No, they're taking all the bank's money. Oh my God, they're taking all the bank's money and investing it, making interest over and over and over again, cash flow over and over and over again. Okay, Mr. D, Denzel having a hard time getting line of credit due to credit 586. Any tips? Yes. Come on, man. Let's establish some credit. What's your cash flow? How much cash flow you got? Whatever it is, go get a secure credit card using your cash flow. Matter of fact, take your cash flow and your expenses that you can pay with a credit card, and you use that money, right? Or you take some money from your savings account. Go get a secure credit card. Go get a secure personal line of credit and start using the thing. Boom, 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 and run expenses through the credit card and pay yourself back in full every single month. Don't go into more debt. Just use the credit card for your monthly expenses that don't change, you know, food, gas, miscellaneous, phone bill, electric, internet, all that stuff. Okay? That's fundamentals. All right? Mr. Gale, I got a video called What to Do Before Velocity Banking. That's where you fit in right now. Okay? I know you want to go, right? I know you want to go, but we got to get the fundamentals down. Okay? I'll be honest with you, it took me 2.5 years just to learn this freaking concept, to master it. I made a ton of mistakes in the process. And then, you know, I learned and kept learning, and here we are. Okay? So it's going to be the same road for you, right? No different. Let's see. Did they borrow the rest of them? I've watched all the videos. I am fortunately starting debt free. Wow, starting debt free. Just have two. Well, man, you're not debt free if you got 2 mortgages. Nah, man. Joel says a setback is an opportunity for a comeback. Yes, sir. Yes, sir. Bang says, what tier do I need to sign up for if I just want to learn more about life insurance for a debt weapon? You don't need to sign up for anything. Okay, the Patreon and my Velocity Banking Intensive is really geared for all my people, all my moms that are in terrible amount of debt. If you want to establish a life insurance policy for your kids, for your wife, for yourself, you just can email me. I also have a link to my team where it says whycashvaluelife.com. It's on all of my videos in the description, and you can click on that and you can talk to my team and myself. And what's beautiful is that if you get a policy, a life insurance savings plan or a life insurance asset, okay, under my team, guess what? You have access to me anytime. I'm your agent for life. Need help with Velocity Banking? I got you, right? Want me to run some numbers for you? I got you, okay? So you don't have to sign up for that, because when it comes to life insurance, the infinite banking concept, the team that I'm with, that I'm so grateful to be a part of, They do not charge for workshops and seminars. They're not pushing like sales training programs. They're just like, here's the info. You want to get a policy? Cool. You don't? Cool. We're too busy actually putting policies in place for people that they say we don't even need to sell the trainings and the coaching and the things like that. We just do this. They're practicing every day, day in and day out, practicing. Let's see. Israel says, how can I invest while paying off debt smartly? That question is based on that. Have you 10x'd your income? If not, you shouldn't even be thinking about investing. Grant Cardone has a rule. He says you should not invest a penny in anything until you have $100,000 in cash, whether that be sitting in a cash value life insurance policy, in your savings account, in some sort of asset, 100K. In the meantime, you should be investing in yourself, reading books, obtaining information, watching videos, going to seminars and conferences and sales trainings and things like that. Invest in yourself until you can say, Denzel, I got 100K, 100. Not, what is it? Over 50% of Americans don't even have $1,000 in their savings account. Don't even have $1,000 in their savings account, over 50%. And all these people are asking the same question. How can I invest money? How can I invest money? Can you save first? Can you get out of debt first? And then we can talk, Gotta get your income up. Nice. Let's see. I just withdrew $16,000 from my 529 college fund. I can either use $15,000 to bring my current HELOC to a zero balance or throw it in my mortgage. HELOC does not have checks or a debit card. So what? Is your HELOC is it a home equity loan or is it a home equity line of credit? If it's a home equity line of credit, I would throw the $16K in the HELOC, okay? Because that's your debt tool. That's your debt weapon, right? Or should I just open a better? Oh, okay. So you don't have. Is that what you're telling me? You don't have that's probably a loan, home equity loan, right, Mark? Let's see. Israel says my cash flow is about the same as the couple you are helping in this video with about half the debt. Oh, well, nice. Look at you. Look at you. Okay, the next question for you, Israel, is if you have half the debt, so 150K, cash flow is rocking, okay? If you have a solid line of credit, we can, my rule is 60-40. You take 60% of your cash flow, do velocity banking with. You take 40%. This is Grant Cardone's method. You take 40% of your money and save it, right? Until you get to 100,000. And then you invest that 100,000 and you make 10x. You make 100,000, $1 million, right? And that's a solid plan. Can't go wrong. Put little dollars to make little dollars. I never liked the idea of putting little dollars, like dollar cost averaging. I don't know, man. I'm young, I'm stubborn. I've read the whole dollar cost averaging thing. I'm just like, yeah, but if I knew the thing that I was investing in, man, I'll go all in. I'm going to become obsessed with the thing that I want to invest in. Is it real estate? Is it a business? Is it a product, a service? And I'm just going to get way more results than all the other people doing this dollar cost averaging in their 401ks and their IRAs. and not getting results. So that's my opinion, Israel. But you know, you're hearing from a 23-year-old, so you know, uh, I can't exactly say, yeah, I know everything, because I don't. I make mistakes. I love making mistakes. You know why? Because now I don't have to make them again, and then I can move forward that much faster. The faster I fail, the faster I succeed, right? Oh, Mark, they no longer offer HELOCs, so they have limited what I can do. Oh man, dude, why'd you pull money out of the 529 plan? What the heck? Oh man, I think you just put yourself in a bind because now you owe money on the 529. Can't use the damn HELOC. It don't make sense to put 15, 16,000 on a mortgage if you owe somewhere around that. I'm hearing a mess because I don't know. Maybe that's not the case. Um, let's see. What's your suggestion if you already have a 401k that you know that you now want to stop and get that money over 300,000 to use for velocity banking without incurring the penalty? Okay, it's called a 72T distribution. Head up. 72T distribution to extract money out of a qualified retirement account without the 10% penalty tax. My next question is, how old are you? If you're in your 50s, then it might be a really good strategy because you can start liquidating the account before you get to 59 and a half. And then by then you're already liquidating the thing. If you're younger, in your 30s or 40s, if you're trying to liquidate it, that means you're completely okay with pulling all the money out of the market. You're like, I'm done, right? If that's your mindset, then cool, I'm with you. If that's not your mindset, then my suggestion would just be to cut off what you were putting into it, and then just let the thing grow on its own, whatever it grows to, But if you're someone that's, what, I've been doing my homework, I don't like what the market is saying right now, I see a downtrend, I see the curve going down, I want to get out. If that's what you want to do, you want to get out and you want to just use that money to wipe out all your debts because physically and mentally you will feel a lot better, then I'm with you. Let's go. But remember, it's all on you. Preference. Let's see. Sounds like investing in myself. It is. I definitely don't have 100,000 saved yet. There you go. We'll definitely be signing up soon. I respect the movement, my brother. I like you. Rose says, you do great work, Denzel. Thank you, young sir. Thank you. I appreciate it. It's with the help of couples like this family on the board and all the other scenarios that I've done. They have contributed to the channel. They've given hundreds of dollars. Some people have given over 1,000. They're just like, here, I love what you're doing. Go help more moms. Go, right? And just, man, it gets me so excited. Look, we're already at an hour. I want to keep going. I'm just like, I'm supercharged this whole week. I can't tell you how blessed, how many blessings have been coming in. I mean, there's a lady that I'm working with in Afghanistan. Wow. You know how cool that is? So she's out there and doing her work, watching videos. And I don't know, she just decides to sign up at my program, the Velocity Banking Intensive program. She threw down $1,000. Here you go, son. Pour into me. I'm like, ma'am, I am going to serve you like no other. I can't wait for this woman to get so many results. I mean, I can't believe what's coming for that lady. Let's see. Mark says USAA is where I got my HELOC. They're no longer okay. So the bank themselves is no longer offering HELOC. So I can only transfer between their checking accounts, but it takes a few days to transfer between accounts, which hinders velocity banking. Mark, are you my tier 3 client? Are you my tier 3 client? I have a Mark in my tier 3, but I don't know if it's you. Okay? Dude, if you're in a mess, man, you gotta get a partner going. We gotta do some work together. We gotta figure this thing out. Ruben says, I wish I had half your knowledge at age 23. LOL, just turned 35. Happy birthday, Ruben. Everybody say happy birthday, Ruben. All right. Can't I pay off the HELOC and open a new one with another bank account? Yeah, because, okay, so if you have the ability to zero out that HELOC, and then we go ahead and get a new HELOC because that thing is like not a good debt tool, then yeah, that might be cool. That might be something powerful there. Let's see. Yeah, Ruben says get another HELOC, use velocity banking to pay off that HELOC. That makes sense. That's a potential move right there. Hello, Rush. Had a wonderful conversation with Rush. Everybody letting you know right now, Rush is starting a YouTube channel. She's gonna blow up. Y'all support her. Okay. Here it is, Rush, putting you on the spot. Now you have to start the YouTube channel because the whole community knows that you're starting a YouTube channel. And she's going to be talking about velocity banking. She's going to be like, you know, those Dave Ramsey smaller channels, right? All those Dave Ramsey smaller channels. They're like my journey to get out of debt, how I, did all this stuff. She's going to do something just like that, but for velocity banking. How cool is that? Kind of, map out her whole journey. And the fact that she's working with me, she's going to get fantastic results. Let's see. By the end of this year, I am going to start my whole life policy. Should I open just one or two? One for me and my wife. If I'm not looking for death benefit, but cash value growth. My friend, let me tell you something. Okay? Let me tell you something. Always get the wife involved. That's it. No other. There's no debate. Involve wife in every financial decision you make. You don't understand how knowledgeable the woman's mind is when you let her flow. Oh my, I mean, there's so much locked inside mothers out there across the world that are not living to their potential, that should be living to their maximum potential, and you're not being involved in the financial decisions. It's time to get involved. So, Mr. Rich, wife, always involved. No question. You do her first before you do you. That's my rule. Let's see. Mark. Okay, so you're not a tier 3. Okay, go to my website, Mark. Let's make a decision. Let's work together. I'm not gonna sell to you. I'm just gonna be listen. Let's work together. You got it. You got a problem? I know how to fix it. We can do some work together. We're gonna do some velocity banking. We get this ball rolling. We're not playing no games. No games. Let's see. Carlos from New York. Truly enjoy your videos. Do you have team members in New York for advice? No. You got me. Okay? Do some work together. Ah, look at everyone saying happy birthday to Ruben. How nice is that? How nice is that? Okay. By the way, you've opened my eyes. Been doing velocity banking with my credit card, working great. Many, many thanks. Yes, good, good. So you all right. So you got some moves. So maybe you're not in a big deep mess, but we just got to figure out that HELOC thing. Okay. Jorge Castro. Jorge, my teacher, my Spanish teacher, Jorge, is that you? If we have anybody from Texas, I got a personal line of credit, not a loan, from El Paso Teachers Federal Credit Union. Took 2 hours. Not bad. Like buying a car, huh? 10,000. Oh, Castro, is that you, man? Please tell me that's you. My teacher. We did a video for this guy way back, a couple months back. And oh man, that'd be so cool. Yes, that's my teacher. Yes, he got. So this guy right here, Mr. Castro, started working with me when I was a little baby, right? Just starting my YouTube channel. He reached out to me, he believed in me, gave to the channel, and he's been giving ever since. And it's just been going good. So, all right, ladies and gentlemen, we are well past an hour. Are there any final remarks? Anything you want to go over here for my couple? I love you guys. You was causing me some stress, but out of stress, birth the micro chunking method, and I hope it works well for you. I hope you get massive results, become debt free in 5 years or less. May God bless your soul, right? Raphael says, I got that $5,000 line of credit. Cool. Floyd, love the work, my friend. Bryson, how are you? All right. Good night, everyone. Thank you so much for your time. Tuning in tomorrow night, doing another live stream. And then the next night after that. And then I'm c'est la vie, going on a cruise. Okay. And I'll be back and we'll get this thing going all over again. Coming right back for more. Oh, Vincent got denied for personal line of credit. That's okay. It's okay. You gotta, don't worry, man. Come February, you said we're gonna work together. Come February, we're gonna do some work together, all right? Just put things on halt real quick. All right, you gotta reevaluate the credit score. You gotta go back to the foundations, the fundamentals. You gotta clear all that out. Okay? Good night, everyone. God bless.